Dipan, hi, good morning. Bihar election day, do you anticipate some volatility?
One second. Yeah, good morning. I think, no, I think the results are more or less in line. I can see that the NDA is leading pretty much so, and that got discounted because of the exit polls also. So I think it's one more event over and done with, and some of the reforms or, some of the steps which the government would want to take, I think they will start coming out with those steps and reforms now that the Bihar elections are over and done with. So I think it's market will receive it positively, but don't expect too much of upside because of this particular event. It's more or less got priced in.
Deepan, if you look at some of the consumption stocks which came out with earnings, what's your takeaway from there? You had the Jubilant Works, which is coming in, Page Industries, some of these companies who came out with earnings where their commentary on consumption has been weak or very muted.
I think so far as consumption is concerned, the biggest event which happened in September, that particular GST and the announcement made before that, that did cause some amount of sales to be pushed into the next year. And look, markets are forward thinking. I think every company worth its salt has said that this particular festive season has been exceedingly good. So I think that going forward, the focus will be on the December numbers and September numbers, although they may be a bit soft for various reasons also. I think improvement in consumer sentiment, better monsoon, tax cuts, income tax, as well as GST, lower interest rates. I think all of this should lead to definitely a significant improvement for most consumption-oriented companies. And I think that the more underpenetrated the category is, the better the chance for returns from the investor's perspective. Like for example, in the consumption, we have the consumer appliances, but look at the numbers which came from Forbes, So that I think is important that the underpenetrated categories should do far better than the other categories where there's a kind of, I would say, mature situation.
The LG Electronics numbers, if you have seen the numbers, they were weak on the top line, EBITDA and PAT.
Sorry, I didn't get the name of the company.
LG Electronics.
Yeah, that's right. But if you read the management commentary, they clearly said that because of GST cut, a lot of sales got pushed. And then next year, next quarter onward, I think sales have really picked up for LG as well. So I'm not too perturbed about these soft numbers. I think, watching these, especially these consumer appliance companies, these things do happen from time to time. But by and large, I think the trajectory is very strong. And these are great secular compounding stories as well. And LG being the largest consumer electronics or consumer appliance player certainly has got very good prospects and still I think reasonably valued compared to some of the peer groups like say an Havells or a Blue Star or even a Voltas for that matter.
Flying. Dipan, let me club these three and with a special focus on Tata Motors CV. What's the sense like? By the way, hi, morning. We also have Osho Krishnan joining us. Morning, Osho, from Angel One. But Dipan, again, taking the question to you with regard to the CV space, good tailwind expected in H2. Who will be the winner here and relatively who's looking better?
Yeah, good morning and thank you for having me on your show. I think both Ashok Leyland and Tata Motors are going from strength to strength, and it's a reflection of the opportunity in the marketplace. Typically, when commercial vehicles start to do well, you understand that the underlying economy also is doing well. It's a great play on industrial growth as well as overall improvement in GDP. And the fact that both companies reported decent set of numbers is very positive for the overall economy. I think reasonable valuations over here and management commentary is extremely positive. GST rate cut certainly has benefited these companies as well. And I think they are on course to achieve kind of a double-digit kind of a top-line growth, which would result in high teens type of a bottom-line growth over the next few quarters or so. So very positive on both these companies. One could look at acquiring them. They certainly, within the auto industry, one should be overweight. And we are seeing good numbers coming from the entire industry. So I would say that both these companies, Ashok Leyland and Tata Motors, now it's Tata Motors CV, but the actual name is Tata Motors on the exchanges, both should do relatively well going forward.
Just looking at the defense pack yesterday, of course, perhaps Cochin Shipyard played spoil sport, and that maybe rubbed off on the rest of the defense names too. The leadership like BEL as well ebbed off just a tad bit. But look at the Bharat Dynamics today. Excellent set of numbers. Both the revenue and the EBITDA for the quarter gone by have nearly doubled. And a fresh order from the Ministry of Defence for Invar anti-tank missiles. And it's a sizable quantum as well, 2,095 odd crore rupees. Dipan, you think the defence theme will continue to be a structural story and a short term as well?
Yeah, Aisha, I think now all defense stocks are pretty much well discovered and their order book positions, the opportunity has been captured in the stock price. So investors who are underweight defense, my strategy would over there would be to buy when the company's numbers are disappointing. Because typically these companies are sitting on very book order book position, but their execution keeps on fluctuating. And because of that, there's volatility in these stocks around the time the results come through. So if you're underweight a particular stock, it's a good opportunity. Eventually, you will have a great quarter. And eventually, I think the order book position that they're sitting on will get executed. And as and when new orders come, the sentiment does tend to improve in these companies. So it's a kind of a well-discovered sector. And investors should definitely be overweight on it. But timing of the entry is important if you're underweight. Otherwise, I think even on bad numbers, you shouldn't throw in the towel. You should remain invested. That is my viewpoint.
Okay, and Osho, how are you placed where defense is concerned in terms of a view?
Very good morning. Yes, no doubt defense counter is looking positive, but overall in the recent period, there has been some kind of consolidation. So I'm expecting that once there will be a consolidation breakout in majority of the players that you just have taken the names like BDL or BEL, both the counters has been into a strong consolidation. So I expect once there is a consolidation breakout in these counters, then one can definitely look for a momentum play in these counters. Currently, from a investment point of view, one should stay invested because majority of the counters are hovering at a decent zone and is having a very strong structural movement in the recent period. So overall, I am expecting a bullish view, but momentum play should come once there should be a consolidation breakout in majority of the defense players.
Ashok, what is your own sense on what, or rather how the Bank Nifty composition is now going to shape up? Where should the leadership signs actually now emerge after that bout of PSB's strength playing out?
See, overall, I'm having a very bullish approach in both the key indices. But for Bank Nifty, it has been an outperformer and has been hovering at lifetime highs. So there is a kind of shift that is being seen in the banking space from PSU. Now the private sector banks have started taking the leadership in the last 3 to 4 trading sessions. The majority heavyweights like ICICI Bank have started gaining some traction. So I'm expecting that from here onwards, the momentum on the higher end should continue in the banking space. But from here onwards, private sector can see some kind of positive traction in the coming period. So more focus should be given on the private sector bank rather than PSU banks that we have already seen a decent rally in the last 3 weeks. So I'm expecting a decent move, but no doubt today there can be some kind of volatility. But overall, the structure remains positive and dip should be utilized to accumulate positions in banking sector.
Okay, and talking about banks, one stellar set of numbers, frankly, and that is Muthoot, beat across all parameters. NI growth, profitability, both were a very, very strong beat. Kunal, you were positive with regard to Muthoot on charts. If it opens gap up today, and I'll take you through the numbers as well before I discuss with Dipan. But first on charts, give us a sense if it opens gap up today, maybe 3-4%. Is it a good buy even then?
I actually had Muthoot Finance in the mid cap pick today also.
Okay.
So I'm bullish on the fact that the best part about Muthoot Finance is the statistical part, which it has a direct linkage with the gold prices, and we've seen how gold prices have moved in the last a week or a couple of weeks. We've seen a good 6,000, 7,000 rupee terms rally for the gold prices, and that generally has a very direct correlation with respect to the prices for Muthoot Finance. So, and look at it this way: the stock at 3,400 plus levels is also on the verge of a breakout of the previous highs for itself. So that should be another trigger for the stock to perform very well.
Dipan, that's the thing, right? I mean, it's not just gold. Of course, gold's always there and continues to shine up. But even the gold financiers have, managed to ride the wave so nicely.
That's right. I think certainly it's easier to top up loans when gold prices are higher, and even the NPAs are lower when gold prices rally the way they have. And Muthoot Finance, I think the key differentiator that has stuck to its knitting and been focused only on gold loans despite all the ups and downs, despite so much of competition also coming in. And I think that's been the key winning point for Muthoot. No doubt, I think its presence, its brand has made a big difference now that the industry has revived. But nonetheless, I think that it's the fact that it has not, veered into, say, microfinance or into some other loan products. I think that certainly has benefited the company. Having said that, it's a company which we and our clients are invested in as a measure of disclosure. And I think going forward also, I think this company will be amongst the fastest NBFCs in the entire space because of the product and because of the positioning, and most importantly, because of their systems and risk management strategies.
2% Dipan on the gold loan book AUM growth, 59% on net interest income with a one-off there in terms of the interest income. Even if I exclude that, it's a very, very solid 45% odd in terms of that NII growth. Profit is up 87%. No concerns with regard to asset quality. It remains quite decent. Net stage 3 is actually off on a sequential basis. And there is enough and adequate provision buffer remaining. The only likely, Dipan, the only likely risk here is what happens if gold prices cool off. Would then that become a concern? By 5-10%, LTV starts to come into play. You could likely have defaults, and we've seen the cyclicality in gold loans. Can Muthoot stay away from that cyclicality, or can it be the outlier in a bad cycle? And do valuations therefore add up at this hour? Give us a sense of that.
No, see, I think Muthoot has seen many periods of volatility in gold prices. They've seen correction in gold prices as well, and they have a good system in place to manage these kind of risks which are there in the business. And in the event of a drop in gold prices, sure, I think you could have the bad loans creeping up. But having watched this company for the past several years, decade plus, I can tell you one thing, that as compared to some of its peer group and competitors, it will handle the gold decline price far better than any other player within the industry. And look, promoters of Muthoot are really long-term players. And in fact, a drop in gold prices and slight increase in provisioning for bad loans may be a good entry point if you have a 2-3 year type of a view, because these situations are transient and they have the experience and the bandwidth to manage it. So I'm not too concerned about gold price decline having an impact on Muthoot. Certainly, sentiment may get affected for a quarter or two, but I think that any corrective, any phase of slight sort of uncertainty are good entry points for a company which has got, I think, a very decent future.
The city